Hello, guys. Uh, Welcome to my daily stock analysis channel. My name is Joseph Ejike Oji, and I'm going to keep you company today. In this channel, we focus on analyzing stocks for you so that you can make the right decision on the right stock to buy. Okay. Tonight, our stock of interest is AutoZone. But before I start analyzing this stock, let me make sure you are seeing my screen. Okay. Good. You're seeing it. So the stock is AutoZone. Now, as you all know, AutoZone is a well-known automotive retailer and distributor. They sell automobile parts, spare parts. That's the main thing they do. Now, my analysis of AutoZone be based on three things: the company's balance sheet, company's income statement, and company stock information, which means that I'm going to use some information from these three areas to make my analysis. That way you can now make a better decision whether to buy AutoZone or not to buy AutoZone. So you buy it. I'm a very strong advocate of buy and hold strategy. You buy the stock, hold it for 2 or 3 years, in some cases 5 years before you now sell it for the capital gain. Remember, stock investing is not a get-rich-quick business. You get where you want to be, but you're gonna take your time and do the necessary analysis. The good thing is that this channel make everything easy for you. You don't have to do any maths. The result are already there. All I do now, I'll analyze it and tell you the fact that you need to know before you make a purchase. All right, enough of that. Let's begin for AutoZone. So let's go to AutoZone, get the free information we have online from Yahoo Finance. Okay. So AutoZone, the trading symbol is AZO. As you can see, as soon as I put the symbol, it shows up. So I'm going to click on that. Now, today, the stock is trading at, the share is trading at $2,632 per share. Now, that tells us that this is not a stock that the small-time investor like me and you can buy, because the stock price is very high. I will not be surprised if AutoZone will do a stock split in the coming months. It's very possible that, because not many people will be trading this stock because it is rather high. As a matter of fact, let me show you something. Let's look at the historical price, okay, of the stock, and then look at the volume, okay. Make it let's make it to 1 year, okay. Not make it monthly volume. Apply. So you can see, and the volume have declined sharply. See, it used to be 2,963,600, but now it is 835,100. So the volume have actually decreased, showing that people are finding it hard to trade on this stock because this price is so high. So watch out for AutoZone. They might go have a stock split in the coming months. Okay. Having said that, now back to why I say that it is not for small investors like me and you. Now, for most people in our category, when we want to buy stock, we use 50,000 to buy it, or 30,000, and you want to get as much as 100 stocks, in one company. Why? Because just like when you go to buy eggs, you buy eggs in dozens. Bread has dozens. The baker want to buy bread, buy in baker's dozen, which is 13. So the same way for stocks, it's good to buy it in hundreds, 300, 100, 200, 300. Now, if you have $50,000 to invest, you cannot get that. Let's see. Let me show you. By that, if you have, let's say that we have 50,000 and you want to buy AutoZone stock at this price, which is 2,263. Let me write it down. 2,632.7. Okay. And then I'm going to show you something now. Okay, we'll have this. Okay, I'm gonna connect you to this place. Okay. I hope you can see my calculator. So you have 50,000. And how much of AutoZone stock can you get? Excuse me. 2,632.70. You can only buy 18 stocks. That is not what you want as a small time investor. So the bottom line is this. This kind of stock is suitable based on the price. Those who can afford to buy it is for high net worth individuals, like the silent millionaires that live in our neighborhoods, or people like Warren Buffett, Facebook king Mark Zuckerberg, Elon Musk, all those, or another individual that can buy this stock include what we call they call them the institutional investors, like pension funds, mutual funds companies, index fund companies, exchange traded funds, insurance companies, and so on and so forth. So you might want to invest through them by buying a mutual fund. You can buy a mutual fund, and then through that mutual fund, you can now invest in AutoZone. But don't make the decision yet because we have not analyzed the stock yet. So let's jump right into the analysis of AutoZone stock. Okay. So now, the first thing we do is to look at the go to the home page for AutoZone. So probably the summary. Okay. Now look at the chart. What this chart is telling us. Now, these charts, usually those that do technical analysis use that, but I'm using it to show you the trend. How is this best AutoZone stock? Is it telling us that the stock will rise or not? So let's see. I'm going to click on it. So you can see that, normally stock move in up and down in a very erratic way. So the best thing to do is to put an indicator, like the moving average. So I'm going to put the 200-day moving average. Okay. 200-day moving average on that. And save it. You can see the moving average. You can see the trend. The stock is trending up. You can see that. It shows a bullish signal that it will keep going up, the stock price will continue to go up. Okay. Now that is really good if you ask me, because this shows that for this kind of trend we have here, as you can see, it shows that it's rising. So a rising 200-day moving average for AutoZone suggests that its stocks average price over the past 200 days have been rising. So this is actually a bullish signal. Okay, it passed the first litmus test. Now let us go back to where we are and then look at the statistics. See, we look at the statistics for AutoZone. Now, on the statistics, what do we see? We'll be looking at things like profitability, management effectiveness, income statements, balance sheets. Let's go through them one by one. Let's start with the profitability. We look at the profitability. Now, remember, like I mentioned at the beginning, AutoZone is a prominent automotive part accessories retailer and has been the staple in the industry for many years. So to assess whether AutoZone stock is suitable for a buy and hold strategy, let us go through this again. First one is profitability. From the profitability standpoint, AutoZone is a bit strong performance. As you can see from the numbers here, profit margin is 14.62%, and operating margin is 20.25%. So the company's profit margin of 14.62% indicate that it retains a significant portion of its revenue as profit. And the operating margin of 20.25% reflect effective cost management and operational efficiency. Not only that, the return on assets we have here of 14.24% means that AutoZone effectively utilizes its assets to generate earnings. Let's look at the income statement. Now, AutoZone reported a substantial revenue of 17.66 billion for the trailing 12 months, talking about 2023. So now this value indicates a consistent and healthy top line growth for the company. Now the quarterly revenue growth, you can see right here, 5.10%. This also reinforces this growth trend. Now we have the gross profit of 9.07 billion for AutoZone, which demonstrate that the company demonstrate the company's ability to generate profit from the sales. Then one key aspect to consider for a buy and hold strategy is the company's ability to maintain or grow its earnings over time. So that is what investors are looking for, that ability. So AutoZone's net income, if you look at net income here, which is basically the profits, is 2.58 billion. So that is a good, I mean, it's not negative, and it's I would say significant. So but the diluted earning per share is $137.43, and the quarterly earning earning growth year on year is 10%, and which is positive, which indicate that AutoZone is not only profitable but also it is steadily growing in its earnings. When I say earnings, I mean the profits. Now let's look at the balance sheet. Okay, we see that the AutoZone does have a relatively low current ratio of look at the current ratio of 0.79, which suggests that it may have some liquidity challenges. However, this is common in the retail industry, where companies often carry large amount of inventory. So a low current ratio is very common in the retail industry. But the total debt of 11.949 billion, you can see total debt here of 11.49 billion for AutoZone is a notable concern, although the debt to equity ratio is not provided. Yeah, don't have the debt to equity ratio right there. So making it difficult to assess AutoZone's leverage position. But the negative book value, see, you can see the book value here, negative book value of 294.41 is also well, this is per share. You know that this is per share and it's negative. So that negative book value per share is a result of accounting treatment that should not necessarily be interpreted as a negative sign. So now the decision now will now become, should I buy AutoZone and hold it or not? Well, from what I seen so far, I've shown you the positive and negatives. So usually I tell my people that ask me this kind of question, if the positives are more, then God bless, go ahead. With respect to AutoZone, I'm going to say this. AutoZone financial performance is strong, with robust profitability metrics and a consistent revenue growth. However, the high level of debt and low current ratio should be considered carefully. So when AutoZone stock is good, whether it is good for you in terms of buying and holding it, depends on your risk tolerance and investment goal. It may be a stable candidate for you if you are a long-term investor who believe in company's ability to maintain its market position and continue generating profits. But don't forget to do a thorough analysis of its debt situation. Okay. So now you can see it is now up to you to do the analysis. I mean, to make that final decision. But if you're a long-term investor, if you're high net worth investor, because I say high net worth because of the stock price, then if you're high net worth individual, not long-term, then since the positives are higher than negatives, at least 75% are positives, why not? But if a small time investor, if you want to put your money in AutoZone, you can buy it as a single share. So the best route for you is to go and buy a mutual fund that invests in AutoZone, and from there you can have access to this investment. I hope you enjoyed my lecture on this. Listen, stay tuned for tomorrow. The stock we'll be analyzing tomorrow is Tesla. Thank you for listening, and don't forget to subscribe to this channel. Have a nice night. Bye.